Assalamualaikum warahmatullah. Very good afternoon. Welcome to Sada Education. We are here to continue looking at Riba and the banking business. As we know that the banking business is the entity by which al-bay' can be evidenced in the offering of Islamic financial product, because it is in the banking business that riba prevail. The bank take deposit and pays deposit rate, or the bank take deposit and pays interest to the depositors. The bank make loan and charges interest to the borrower, and therefore when we would like to see how al-bay' is to be applied in banking, then it has to be from this perspective of fund mobilization and the financing. We have earlier looked at the deposit market, where the bank pays interest rate on the deposit, and deposits are essentially loans supplied by the depositors, and the bank will use the deposit fund to make loan. So on our left side here, we can see that a loan money supplied by the bank to the borrower, and we can see the terms of the loan here, whereby the facility is at 10 million with a interest rate of 10% per annum, with a tenure of 5 years, and therefore the interest charges would be 5 million, which is 10 million times 10% times 5. The interest charges would be 5 million, and therefore the total debt owed by the borrower is 15 million, which is the sum of the loan of 10 million plus 5 million of interest charges. So on the day when the borrower steps in to sign the letter of offer, the borrower owe the bank 15 million and not 10 million. So by virtue of the interest-bearing loan agreement, we can see that there is a loan appreciation from 10 million to 15 million, whereby the appreciation in the loan is due to the payment of interest. So we can see that the bank, the banking business would leverage on the fact that they are able to use other people's money, in order to make loans. The bank do not use their capital fund to make loan. Instead, they will mobilize deposit fund, which is loan supplied by the depositors, to make the loan to the borrowers. And therefore, the bank should be able to make some profit from this, intermediation role, which is the interest margin. So when the loan rate is set at 10% and the deposit rate at 3%, then the bank will be able to acquire an interest margin of 7%. So that is how the interest-bearing business, is undertaken, where in the deposit market there is a deposit appreciation, where depositors do not take any risk, and despite the fact that they don't take any risk, the interest-bearing system allow them to enjoy some form of deposit appreciation from 10 million to 10.3 million. And at the same time, when the deposit fund is used to make loan, the bank, will be able to enjoy loan appreciation from 10 million to 15 million. And of course, by doing so, the bank will have to face a number of risks associated with the facility, namely credit risk, market risk, and liquidity risk, as well as operational risk. But all of this risk must be well mitigated by the bank before they offer the loan, because the bank need to make sure that the loan are good loan. They are good and viable loan that should be able to be repaid in full by the borrower. If not, the bank will face problem when any of the loan become toxic, and therefore the default event can take place, leading to huge losses, and that would be difficult for the bank, because any losses, the bank would not be able to absorb the entire losses, because the amount of money used to make loan are not coming from their capital fund, but they are coming from the deposit fund, and therefore the depositor will be in jeopardy when banks are negligent in making loans. So these are some of the issues that we will further discuss and examine in the Islamic banking business when we look into the use of al-bay' over there. Thank you very much. Don't forget to comment and share and to subscribe. I will see you again. Assalamualaikum warahmatullah. Thank you very much.